Welcome to The Explainer. Today, we're diving into a company that has just, well, exploded onto the world stage, Novo Nordisk. Its stock has gone completely stratospheric, and it's got everyone asking one massive question, which is really what this explainer is all about. Has the market completely lost its mind? Let's find out. I mean, really think about this for a second. How does a Danish company, mostly known for insulin for decades, suddenly become more valuable than the entire economy of its own country? The story behind this is just wild, so let's dig right in.
And to really get a sense of the scale here, just look at this number, $700 billion. That's the kind of market cap we're talking about. You know, this doesn't just put Novo Nordisk in the big leagues of pharma. It puts it up there with the tech titans. This isn't just a success story. It's a financial earthquake, and the whole world is watching. So, what's the engine behind this rocket ship? Well, it all starts with what our source material calls the GLP-1 gold rush. Let's get into the drug that basically lit the fuse on all of this. Okay, so the magic ingredient in this whole gold rush is a class of drugs called GLP-1 agonists. You've almost definitely heard of them, even if you don't know the class name. We're talking about Ozempic and Wegovy. Now, they were originally for type 2 diabetes, but they had this one little side effect that turned out to be a complete game changer: major weight loss. And just like that, in a world struggling with obesity, that side effect became the main attraction.
And the business impact? It's been absolutely staggering. I mean, look at these numbers. Revenue growth is just soaring, past 25% every year. The stock price? It's tripled in just 3 years. In the pharma world, which is usually pretty steady, that's not just growth, that is a rocket launch.
But here's the thing. It wasn't just about the science. A massive hype machine kicked into high gear. You started seeing these huge media headlines asking things like, is this the end of obesity? You had celebrities all over social media talking about it. And then the big one, the FDA gave it a stamp of approval for reducing heart attack and stroke risk, which was the green light for insurance companies to start covering it. It was truly the perfect storm. But you know how it goes. Is any story of growth ever this perfect? Well, according to our source, probably not. Underneath all that incredible hype, there are some pretty significant risks. Cracks in this perfect story that the market might be choosing to ignore. It's time to start peeling back some of those layers.
So this is the big question, right? Is the market really seeing the complete picture? A story about a miracle drug, it's powerful, it's easy to believe, but it might not be the whole story. So let's look at the first big crack in the narrative: competition.
Right off the bat, Novo Nordisk is not playing this game alone. There is a massive competitor in the ring: Eli Lilly, and their drugs, Mounjaro and Zepbound, are coming straight for Novo's crown. In fact, some of the trials are even suggesting they might be better at weight loss. So this isn't a monopoly. It's a high-stakes head-to-head brawl for a multi-billion-dollar market.
And the competition is just red flag number one. The source points out a few more. First, you've got massive supply shortages. Novo literally can't make the stuff fast enough. Then there's the cost, which is over $1,000 a month. And then there's the simple biological fact that for a lot of people, as soon as you stop the drug, the weight comes right back. And on top of all that, you've got a whole pipeline of other competitors, giants like Pfizer and Roche, and they're getting closer.
So when you start to stack up all these risks, fierce competition, high costs, the fact that you might have to take it forever, and you put that up against that sky-high stock price, you just have to ask yourself, do these numbers actually make sense? This one number really gets to the heart of it all: 45. That's Novo Nordisk's price-to-earnings ratio. It's PE. And what that means in simple terms is that for every single dollar the company makes in profit, investors are willing to pay $45 for a piece of it. A number like that screams one thing: the market is betting on absolute, flawless, perfect growth for years and years to come. Now, a 45x PE doesn't mean much in a vacuum, right? So let's put it in context. Take a look at its peers in the pharma industry. Pfizer is trading at a PE of less than 10. Johnson & Johnson, same ballpark. Novo Nordisk isn't just an outlier here. It's playing in a completely different galaxy. The market is valuing it on a whole other level. And this brings us to the core argument from our source material. The market is pricing Novo Nordisk for absolute perfection. It's being valued like it's a tech monopoly with endless growth ahead, and not what it actually is. A pharmaceutical company that's going to face patent cliffs, tough regulations, and a growing army of very serious competitors. So you've got this combination of insane hype, an extreme valuation, and a whole list of risks that seem to be brushed aside. Does that sound familiar? Well, our source says it should. To really understand what might happen next, we need to look at history and ask a pretty tough question. Are we watching a classic market bubble inflate in real time? I mean, history shows this pattern isn't new at all, especially in pharma. We have seen this boom and bust cycle over and over again. Remember Gilead? It soared with its hepatitis C cure and then crashed as the patient pool dried up. Moderna, of course, with the COVID vaccine, stock went to the moon and then fell right back to earth. Biogen spiked on hopes for an Alzheimer's drug that just didn't deliver. In every single case, the market fell in love with a story of perfection and then got its heart broken when reality finally showed up. So let's just run through the classic bubble checklist here. Media hype? Oh yeah, check. Exponential stock growth? Big check. Of this time it's different kind of story? Absolutely. Extreme valuation and a tendency to ignore risks? Check and check. According to the source, the pattern is, well, it's pretty hard to ignore.
And all of this really builds to what might be the single most important lesson in all of this. It's something every investor should probably write down. Great companies can still be bad investments if you buy them at the wrong price. And let's be crystal clear, this is not a knock on Novo Nordisk. It's a brilliant company. The drug is truly changing lives. But the quality of a business and the price of its stock are two very, very different things.
So as we wrap all this up, it really just comes down to one final thought. One single question that I think cuts through all the hype, all the numbers, and all the noise. And that question is this: are you buying into a business or are you buying into a story? Because, a business has to deal with reality. It has to deal with competitors and risk and all the messy stuff. A story, on the other hand, a story can be perfect. It can be intoxicating, and it can be very, very dangerous. The real question isn't whether Novo Nordisk is a great company. It's which of those two things its stock price really represents today. Thanks for joining us on The Explainer.